Welcome back to the channel. As always, if you're copy trading, you're an absolute moron and you deserve to lose all your money. And with that, we're gonna look today at a stock called Carnival Cruise Lines, ticker CCL. And the reason why I started looking at this, I first came across this stock back in early April. And back then, I was looking at names to build my portfolio towards a recovery in the US consumer. Now, the company has a lot of debt, and I thought it would be best to wait until we get a little bit more certain about the Fed dropping rates. Now, if we look at how the sectors have evolved, uh, since then, you see that most of the sectors have been going up since then. And that's the reason why I revisited this idea because, as you can see, consumer discretionary has pretty much remained flat since. And it has taken me a while to find stocks that are attractively priced. So, not difficult to find sectors that are doing well, but not so easy at the moment to find stocks that are attractive that I can see moving up in the near term. However, with this sector, which is currently underloved, and a few catalysts that we're going to see, I think this could move up quite quickly. So, first of all, something that back then I was a little bit on the fence with this idea was that the fact that the price of oil have been increasing. Um, and I wasn't sure back then if that trend would continue. But as you see here, the price of oil has dropped from the low 90s to the mid 80s. So that's something that will definitely help the stock. At the same time, we have seen in the last month the PMIs eroding. And I think that increases the probabilities of a dovish stance from the Fed. Um, Something that we see as well is that the consumer sentiment has recovered in recent times. And we obviously don't ignore the fact that inflation is still there. Many consumers are struggling, but the type of consumer profile that this kind of business aims to is primarily retirees and families that are more in the higher income bracket. Many of these kind of families, these kind of consumers, will not be in such a precarious position, and also some of them will not be as affected by the current macroeconomic outlook. Many of them would have already have paid their mortgages. Now they own their property outright. Maybe they're no longer financially responsible for the children, and so on. So I think that as that consumer um, sentiment gives a little bit more traction and could even continue, um, the company gets a little bit more traction. It accelerates with its performance. Last earnings report was actually very positive. That was reported at the end of March. And the company announced that first quarter revenues were of 5.4 billion, which exceeded 2023 levels. They improved their first quarter bottom line by 500 million. They hit all-time high in booking volumes, and they raised their net yield guidance. They also had total customer deposits reaching 7 billion, which is surpassing the previous first quarter record by 1.3 billion. That's very significant. And with all that, the company is now really focused in reducing their debt to regain their investment grade status. So that's something that they expect to achieve by 2026, following a couple of upgrades in late 2023 and early 2024 by S&P and Moody's. But I think that could happen even faster if they are in a position to refinance the debt with better terms, which could be the case if we get a positive catalyst from the Fed. And of course, the business performance is better than expected, which I think is possible. So um, the price at the moment is just below $15. And I think that this trend that started in May last year, right here breaking the 250 SMA, could continue as we go back up this level. I think we could retest this 17 or even the 19 levels relatively quickly. And at the same time, the multiple, um, if we look a little bit closer, compared to December last year, where it was much higher, or even just a couple of months ago, is it could go back to those levels. The price to EPS is definitely attractive. Now, I'm not saying that we're gonna get this price go across the EPS line immediately, but it certainly provides us reassurance that the stock will likely, the probabilities of the stock falling from here are quite limited. If anything, we are, as you can see here, in a bit of a upward trend. So I think that the probabilities are in our favor here. Something that I like as well is that from an EPS perspective, the company is expected to become profitable again this year, and the yield that we're getting, if you take this EPS and divide it by the current price, is 8.13%, which is already more competitive than treasuries. So again, if we get a positive catalyst from the Fed and the yields of treasuries start to drop, I don't think they will go any higher. We could see the stock becoming quite competitive. Something that I think is possible too is that during the next earnings report, maybe not the next one, but obviously increasingly probable as we get exposure to more and more earnings reports, is that the dividend is restored as it was scrapped back in March 2020. So if you combine those two things, this could become a fairly attractive asset for the market. And last but not least, the price target at the moment, the market is assigning a minimum of 13, currently at 15, but with an average of 21. Definitely that leaves room for the price to catch up. You see here that some prominent institutions have upgraded their price target. Wells Fargo 23, UBS 21, Stifel 25, Macquarie 24, JP Morgan 23, Barclays 25, even Goldman, which started their coverage recently, and they tend to be quite conservative, put it at 20, and the stock is currently at 15. I'm saying that we can, in a short space of time, go back to this 17 level, potentially even 19. And that's exactly how I am going to play this stock. So the earnings date is scheduled for the 24th of June, but that's not confirmed. And I think we can play that to our advantage. And if we get a little bit lucky, it can go pretty well for us. So what I'm gonna do is I'm gonna go long the 15th July calls at just one over $1 and sell the 21st of June 15 calls for 76 cents. So with that, we get around 70% credit or on our net spend. Yes, we're playing this in a calendar, but I don't think that this stock has great probabilities of going down from here. And if we get a little bit lucky, we get the credit before the earnings report to go net long just right before earnings. And that if we if the results are good, which I think they will, could give us a return of 3x or potentially even more. Now you see here that the implied volatility is around 44%. That's good. And that's one of the reasons why I have selected this stock within this sector. Overall, I feel it's a sector that is in the middle of a turnaround. But there are other names such as Royal Caribbean and Norwegian Cruise Lines. Norwegian Cruise Lines has a lot of debt, and I don't think that is as appealing as this one. The other one, Royal Caribbean, which I think is a strong contender, also has very decent quants. It's trading at a slightly lower premium, has better margins, yes, but it also has more debt. And the volatility on that name is 25. So the market doesn't feel as excited about that one. I'll keep an eye on that one, but I think in terms of securing a move in the stock, I think we stand a better chance with Carnival in the near term. Also, the technicals on Royal Caribbean, they actually seem, as I mentioned earlier, that the market has already priced that move, so it seems quite bullish at the moment. I think Carnival can follow suit, as we see here, returning back to these previous levels that we saw, rebounding on this 250 SMA. So that's the way I'm gonna play it. Hope you enjoyed that video. Subscribe and see you soon.